Welcome back to the Capital Mindset Show. We're your hosts, Austin and Fabio. And Fabio, today we've got something really interesting for the audience. I'm sure that you've been seeing it in the news. I've been seeing it in the news. I'm sure our audience has been seeing it in the news. Recently, there has been a whistleblower that's kind of come out and has said that Facebook is doing some questionable things behind the scenes, Fabio. They're doing some questionable things behind the scenes. And so now we're kind of making this episode today to kind of look at, with the recent share price drop, if Facebook could be potentially entering the buy range. So Fabio, what are some of your preliminary thoughts really coming into this entire situation unfolding before our eyes right now?
Well, I know Facebook as a business model is perhaps one of the greatest in recent memory. They make a majority of their money from advertising. So public image is somewhat important for Facebook to keep up. However, user engagement is so good on Facebook, well, on Facebook's products, and they have near complete control over entire swaths of how humans interact via social media, whether it be Instagram, Facebook itself, or WhatsApp. And that alone is so powerful that I'm not sure that this whistleblower report actually matters longer term. It doesn't even matter in the shorter term, aside from the price fluctuations that might occur in the stock price due to sentiment. But that sentiment may be driven basically because of the overall exuberance of the price that may have been present at the time. So we'd have to really check that out and see whether or not that's the case. But that's what I would come across, or that I would think of. I know that more recently, Facebook's margins have been dropping simply because they've been investing more in security, whatever that means. And just making sure that certain kinds of content are removed. So that's been a bit of a drag on their cash flows, or the cash flow margins. Their cash flows in absolute terms has increased, but in terms of as a percentage of sales, it has decreased. So that's something to be aware of. But I would say that, again, this is a very good business model. I don't really care too much about what this whistleblower really had to say. As far as it pertains to the business, I don't think it matters.
So something that's actually kind of interesting, Fabio, and it's something that I was reading from a recent fund, actually, and they actually said these people are alleging, so this is allegedly, that Facebook, through what this whistleblower is whistleblowing, in essence, Facebook has been misleading investors, and now they're concerned about a potential litigation risk here. In my opinion, I don't really entirely think that's something that is, in essence, feasible in court, but I'm kind of curious to hear your opinion, because something that might concern me a little bit is in regards to regulation that could be coming towards Facebook that might impact Facebook's business, in essence. So I'm kind of curious to hear your thoughts about that as well. And then also too, let's kind of dive into the model, Fabio. Let's really see if the recent rounds of people saying that Facebook is entering that perfect buy price now, if that holds up under scrutiny in our discounted cash flow analysis.
Yeah, so let's actually set up right here. And basically what I can gather from Facebook is, actually, let me just quickly see what everyone thinks that's going to grow at. Okay, so 26%, so we can build around there. All right, so let's say I just want to make market rate return. I'll assume buyback. I'll assume they're able to continue what they've done thus far with the past 5 years. And of course, we got to type in our ticker. So what I would like to see,
20% minimum. Should we throw on the 20% minimum growth rate, Fabio? Maybe a little bit under and then build from there.
Let's do a 10%, 15, or 20, 25, 30. Okay, so that gives us an idea of what to expect. I would say that if someone wants to get a market rate of return, they could probably safely buy it at this price right here. That's what I would do. But for me, I never want a market rate of return. There's too much uncertainty because I'm not pricing in anything. I might as well just buy an index at that rate. So And some might say, well, the market's not going to return 10%. That might be right, actually. So
Yeah.
10% might unfortunately be above the market rate of return going forward,
Yeah.
unless we get some sort of correction. But let's say we want to make about 50% greater than the average market rate of return over the course of 10 years. That's kind of what it starts to look like. So we start to see a little bit more demand on those pricing versus the growth rates. And let's go again with like 20%. So with 100% margin of safety, yeah, we start to see that we would need to get it at 212, which is actually quite a drop. It's about $100, more than $100 from here. Will that happen? I don't know, but that's what the model is telling me if I want that, assuming they do this buybacks, but they're capable of 4%. So let's say they put 2% into buybacks, and yeah, that's still, it changed it, but not by that much. Let's say they put all their cash flows towards buybacks. Yeah, okay, that starts to change some things. Now we see 25% is a buy price, and they're supposedly going to grow at 27%. They might. I think they probably will. But I don't think they're going to be doing those kinds of buybacks in the near future. They might. Who knows? So just
So now
quickly
let's
looking.
kind of take, I'm kind of curious to see their return on invested capital, Fabio. Kind of want to see the way that they've been investing into themselves. So return on invested capital is 23%. Nice. That is I like to see that. So
yeah, so we can see return on invested capital is pretty strong. Return on equity is really strong. Return on assets is really strong. All of this is really strong, indicative of a very strong business. And the Altman Z score, I mean, yeah, let's go take a look at their key ratios.
Key ratios is our favorite, Fabio. We love these key ratios, right?
Oh yeah, this is the part where it tells us the story. And look at this thing. This is incredible. Look at that. Look at that current ratio. 5 times their liability and about 4.3 times. That means all their current assets pretty much cash right there. That cash ratio is beautiful.
That is a chef's kiss right there, Fabio.
Oh yeah,
as my friends would call that.
Yeah. And then the total debt ratio, all of this is amazing. As you can see, the reason why it's because there's nothing there. Gross profit margin, indicative of a software company. But like I've been saying, those profits have been coming down. And there you go. That's from that investment they've been doing. Because you would think that it would cost them nothing for the marginal customer, but it's because of those investments. So because once you have the network going, the marginal customer cost isn't that much at all. I think maybe server space, and that's it. The scalability is there. So operating margin, solid. Everything is solid. Everything. There's nothing bad.
Yeah, this is a pretty great company, Fabio, as far as I'm seeing it, which is really interesting to me because, we kind of like to look at multiple different facets when it really comes to an investment. And one of those is management. And I've kind of been seeing a suggestion as well regarding the recent whistleblower too, that people are suggesting that Mark Zuckerberg should own up for the mistakes allegedly that Facebook has made, and he should step down and should find a replacement. What are your thoughts on that, Fabio? I'm curious to hear what you have to say regarding that.
Why would you want the management team, which arguably has the highest vested interest in the share price rising, to leave?
Because he's been doing bad things, allegedly. Fabio, he's been doing bad things, allegedly.
Yeah, they've been alleging that about Mark Zuckerberg for a while. Maybe he is. I don't know. But the thing is that I separate what some might see as a social aspects from the investment aspect. So you can make an argument, sure, completely agree with making the argument that some of the social affairs that Facebook has undertaken can be questionable, et cetera, et cetera. But part of this show is we're separating that and we're looking at purely from an investment perspective. I would not like to see from an investment that individual go, seeing that he has a complete vested interest and he's done great thus far at creating shareholder value.
Yeah.
So it's evident in the numbers. I don't have to look past these numbers right here to tell me that story. And I can see the earnings quality here is extremely high. It's consistently been high. That's great. I like to see that. earnings per share, it's going up, go figure. Free cash flow per share going up, go figure. And then the price to free cash flow, that's about a 30, 31.
Book value is increasing as well.
Yeah, book value is going up. So let's actually go, these are useless because it's a software business.
Yeah.
So based on all that, it's a fantastic company. I would say for something like this, I'd require 15% rate of return.
Yeah,
So I'm changing my mind.
I would probably say 15% too, because you know that 15% is really my favorite home base to kind of go to, Fabio. That's really where I like to start. And then I would say that for me, my personal buy price.
Oh, wait, I have to change this.
Yeah, if I was to buy into Facebook, I would like it at about $300, Fabio, roughly around there, because that gives me that basically satisfies any assumptions that I'm having regarding my discount rate in essence. So I would like it roughly around $300. That's what I would buy Facebook at the moment. So I'm really hoping that with all of this stuff coming to light, I personally hope it drives the share price down further. Just being honest.
Yeah.
You know,
I would say for
what
me,
about you? Yeah.
Yeah, for me, I'd probably start accumulating looking here at around 250 and below. I'll be patient. Like I'll wait. I might nibble at like 300 or below 300. I used to own Facebook. So I sold my entire Facebook position about 3 months ago. And I'm not even sure, I'm not even sure if I caught the top at all. I forgot what it even was. Yeah, no, I sold it in June, not 3 months ago. It was a while ago. Yeah, so it sold it for around what it is today.
Yeah.
So I did miss the top. I sold at the end of June. So what day is this? This is, oh no, this is middle June. I sold it like close to the beginning of July.
Yeah.
Yes. Okay. So I have to check my brokerage, but I know I sold it at the end of June.
Sounds like you made a good profit, Fabio.
Oh, no, fantastic profit, because I bought it when they were having those fears about investing in their security or whatever. And yeah, everyone was like, oh, Facebook's dying, blah, blah, blah. It was like going down to hundreds, $120, $130 a share.
Wow. That is a steal. That is a steal, Fabio.
Yeah. So it'll be hard to buy it, at 300. That's a psychology thing.
It is. But yeah, it really is. I mean, I've never been a Facebook shareholder, so that is my personal buy price there. Now, that isn't a price target. That's just my personal buy price that would satisfy the assumptions I'm making here.
Yeah, actually, what Austin's saying there, so we can address that. So we had a comment that brought up a very interesting conversation, which was about price targets and the difference between price targets and buy prices for individual portfolio managers, etc. So price targets are where analysts are basically looking at this business and they're predicting what the market will command of that stock price in the future. That's very different from I'm going to buy it at this price to receive this amount of return, because there's so much more that goes into a price target, a lot of ambiguity, and I think it's less than or about 30% of analysts are actually accurate. I believe that's the statistic, but the point with that is it's very difficult because a lot of things can go into that, because remember, over the short term, many things can happen, but functionally, the things that cause stock prices to go up and down is simply supply and demand in the short term. Over the long term, it's driven by fundamentals because there's no such thing as free money. So a company will never trade at less than a 1 PE. That would be ridiculous unless there's something crazy going on with the structure, right? Then the market's probably telling you in that instance, don't buy it because, I don't know, it's a Chinese VIE. Or something like that. But yeah, but for the most part, price targets, we're not doing price targets on this channel. We will never will. We won't tell you what a stock will go to by this date. For me, that's not going to produce value. What produces value? Not at all. We don't use it at work at all. Price targets are meaningless. It's about making certain assumptions, finding out what risks you find with a company, and then paying an appropriate price that accounts for those risks. That way, if you are wrong, then you still kind of come out ahead.
So Fabio, something else that's kind of interesting too, and that kind of just harkens into exactly what you're saying right now as well, is that a lot of people that are saying that the whistleblower coming out, and that's going to have a detrimental, that's not exactly the word I want to use, but for lack of a better word coming to my mind right now, a detrimental impact on the price of Facebook, Fabio, are analysts. So there was another point that you brought up earlier, actually, about why it can be sometimes costly to put full trust on the analysts. And that situation here, what we're looking at here in terms of the business fundamentals of Facebook, that might be indicative or an illustration of that exact situation we're referring to, Fabio. So that kind of plays into what you were saying as well about when it comes to analysts and especially price targets. And no, we won't ever be making price targets on this channel because it, just like Fabio said, it doesn't produce value. And also, like, you'll never see us make content about how a stock could 5x or a stock could 10x because we don't believe that that produces value either. And frankly, I think that there's a certain level of clickbaitiness behind those. Like, that's not a value producing activity, Fabio. And it actually kind of bothers me because, like, people that don't know or don't really understand investing, like, they're going to be misled into incredibly costly investments in essence, just because of the hype. So we have a bone to pick with hype investing just in and of itself that's devoid of fundamentals. But, you know, I'll step off of my my high horse here for a second. We can head right back to Facebook. So
well, no, you brought up very good points that if a lot of the negative sentiment, which I personally have made it like a policy for myself. I just don't even look at what the analysts say. I come up with my own buy prices. Maybe I look at the analysts after the fact, because I don't want to be influenced by what some guy says with finance degree. I have a finance education, so it's
look at you, Fabio.
Yeah, I'm not ripping.
Become an analyst in no time.
Yeah, no. But what the way they do things, if it worked that well, I can tell you this much: they wouldn't be working; they'd be investing. Simple as that. So if they knew exactly what the price was going to be by 12 months, they wouldn't be working as an analyst, and they wouldn't be publicizing their thoughts. Okay. What we're doing here is precisely not that, and we're trying to find over time businesses that fit our criteria, that we're willing to invest in, that will generate above market rates of return. And what unfortunately is going on is we started this channel when we did, and we weren't able to show them like all the stuff I've built over the time, right? So, but we did it now, and now we're going to show from here on out the different positions that we do end up adding to the portfolio. And that never will come with a price target, ever. That, again, that will produce no value to our viewers. It will simply be like reading tarot cards, because I have no idea what the short-term momentum of a stock could go to. I mean, you could do it. It's a lot like gambling or behavioral finance. Behavioral finance isn't gambling. It's very good. It's like, for example, Elliott wave theory. Elliott wave theory has its merits, and it works. It does work because of behavioral finance and the study of behavioral finance. It does explain that, because people have different like sentiments. They have different thoughts. So you can kind of read the motions of crowds, and then through analysis predict more or less not predict, educated guesses on where prices will be. But it's still not 100%. And so we don't want to provide viewers with something that's not really 100%. So for example, in this model, if these things come to fruition, that's the key word. If they come to fruition. So like, for
assumptions,
example,
it's built on assumptions.
Exactly. Yeah. So if you require 15% rate of return, and they do a buyback of this, and they grow at those rates, that's what you're looking at, right? But those things have to manifest, and any hiccups in that assumption will not manifest that result. And pure, plain and simple. And then you don't know, and then to add that a little layer of uncertainty, you don't know what the sentiment will be on the end year of the model. So like on year 10, what will the sentiment be? What if another scandal occurs and there's a short-term price dump, and then that's when the day you decide to sell, for whatever reason? Well, then it's not going to be entirely correct. It still gives you like a smoothed out version of what the assumptions are, or the vice versa could happen. There could be a point of exuberance and everyone's like, oh, Facebook's the best company ever, and a share price is like $10,000 at that time, and then you sell it for far above what the intrinsic value is. Well, then good for you, but those are all uncertainties. Price targets different from buy prices. Price targets different from buy prices. Separate the two. We can do a whole video on.
Oh, we can do an entire. In fact, Fabio, let's make an entire video on this. I would be very excited to do that.
Put it in the queue.
In the queue.
And then we'll do it. So for closing thoughts on Facebook, fantastic, grade A business. What price will I buy hand over fist? 250 and below, hand over fist. I'll be in there dumping 15-20% of my portfolio into the business if the fundamentals have not changed. If the fundamentals.
What price would I buy? I would buy at $300, and that would just be me personally. Well, folks, you have heard it here first. We hope that you have enjoyed what you've seen here today. And if you have, please be sure to like, comment, and subscribe. Please also share our videos too. It really helps out our channel. And visit our website at capitalmindset.org. We're your hosts, Austin and Fabio, and we look forward to seeing you guys again. Take care.